Welcome, everyone. Nice to see you all again. I'm very happy to introduce our presenter for today, Mallory Hope. Mallory recently completed her PhD at Yale in history and is currently a postdoctoral fellow at Harvard's Center for History and Economics. In the fall, she'll be starting as an assistant professor of history at UW-Madison. And the piece that she's presenting today is part of a larger project, as I understand it, in which she draws on over 4,000 marine insurance records to investigate the development of quantitative reasoning in the 17th and 18th centuries, focusing in particular on how insurance contracts serve to translate many different risks into a single number, the insurance premium. And so I look forward to her talk today. But just a quick note. As you know, this is the last session of the semester. Thank you for joining us. And we'll be doing it again in the spring at the same sort of time and place. So please block out your calendars at 4 p.m. every other Thursday in the spring. And we'll be sending out a new schedule for those sessions within the next few weeks. Anything I'm missing, Peter?
Nope, that's it. Great.
Okay, over to you, Mallory.
Great. Thank you so much, Travis. Thank you so much to the audience for being here on a Thursday afternoon. I'm going to try to share my screen. Okay. Are you guys seeing this?
Yep, looks great.
Okay, great. And if I change, you see the change. Okay. Great. So, well, it's really interesting that I'm closing out the fall speaker series, but I think I'm going to take you to the most remote past of all of the speakers. And so I thought that I probably ought to start with a very, very quick overview of the early history of insurance up to the 19th century, just to give you some sense of where I'm departing from with this talk. And I hope that this isn't too basic for everyone in the audience, but just as a really, really brief refresher on the history of insurance, the earliest examples of premium insurance actually date from the late medieval period, from the 13th century. Insurance was first developed by Italian merchants in cities like Florence, Genoa, Palermo, so that they didn't have to bear the risk of their ships and the cargoes that they were sending overseas being lost or damaged in shipwrecks or in privateer attacks, all on their own. So insurance was introduced to help redistribute and socialize the risks of overseas trade, and it was first employed almost exclusively in this maritime context. As Italian merchants' trading networks expanded in the Mediterranean and then into, one second, the lights are going down. They close the blinds here at a certain hour every day. So as these Italian merchants' trading networks expanded into the Mediterranean and Northern Europe, gradually traders that were local to these other ports started to appropriate this new technology of insurance. And so by the 16th century, we start to find examples of insurance being underwritten in seaports across Europe, including in France and Britain, where I'm going to mostly focus my talk today. So throughout this whole early modern period, that is from the 16th century, when insurance was being adopted in European ports outside of Italy, until the beginning of the 19th century, insurance really remained within the domain of merchants and closely tied to overseas trade. And it was really only in the late 1700s that specialized companies were founded to offer fire and life insurance. From there, of course, new applications and new insurance products just continued to multiply, leading to the diversity that we confront today, which I think the audience could probably teach me a lot about, since I'm just a consumer of these current day insurance products. So intertwined with this history of the growth of insurance markets across Europe is, of course, the history of European imperial expansion and colonization of the Americas. And it's plausible that there's some sort of causal relationship or at the least some positive feedback effects between these two. So as merchants attempted transatlantic and Indian Ocean voyages that brought greater natural risks, as European empires built up their fleets in order to take or to protect overseas colonies, and naval wars grew in scale and in their destructive force, merchants came to consider marine insurance just indispensable, and premiums became a sort of routine cost of organizing any venture. And then in turn, the insurance market served the interests of empires, because how many traders would have been willing to invest in risky voyages that kept colonies well supplied, say in the Caribbean, especially in periods of war, without the guarantee that was offered by an insurance policy? So I'm not going to unpack, of course, this whole matrix of relationships between colonization, the globalization of trade, and insurance. I'm just going to pull on one specific thread, how ship owners and insurance approach the underwriting of voyages within the transatlantic slave trade. Now, I think many of us today, or maybe I should just speak from my own discipline, I think many historians today sort of reflexively accept the idea that capitalism reinforces systems of oppression, such as historically slavery. But when I got into the historical archives and I actually started to read some insurance policies covering slave trading voyages, I realized that there were serious practical and in some jurisdictions legal obstacles to taking this financial instrument that evolved to manage the risk of transporting non-human commodities in the Mediterranean, adapting this financial instrument to ensuring human beings, captives, that are conceived of commodities during their passage across the Atlantic. So let me first of all speak about some of the legal obstacles to ensuring the human cargoes of slave ships, because I want to preserve most of the time to actually compare examples of policies. So the main legal obstacle was the Catholic Church. That idea of putting a pecuniary value on a human life was in principle reprehensible to the church. And it was also considered at the time a temptation to people to commit mortal sins like suicide or murder. And so life insurance was prohibited in many countries, including in Spain and the Netherlands in 1571, and also in France in 1681 through the Ordonnance de la Marine. Of course, in the early modern world, the promulgation of a law is sort of one matter, and the enforcement is another matter. So there are examples of insurance contracts being underwritten in countries in spite of prohibitions. And these early modern insurances are often difficult to distinguish from wagers. Here's an example that I found. This is a mention of a sort of life insurance policy in the account book of an underwriter in Britain, William Brond. And in Britain, life insurance was actually licit. This is an example. It's an insurance. It says it's almost a wager. Lady Lade has not a son who lives until the certain date, 3 years after the contract is signed. Even in Britain, where contracts like this were legal, they're really rare. This is a one entry on an account page that's full of marine insurances in the traditional sense. So life insurance like this on free people in the 18th century was pretty rare. Okay, so this is a graph that I downloaded from an open source resource, the Transatlantic Slave Database. And in this graph, you can see a rise in the number of captives being disembarked in the Americas that really begins in the second half of the 17th century. And then that number accelerates in the 18th century. So in this period, British, French, and Dutch imperial subjects and monopoly companies began to participate in trafficking African captives and selling them in the American colonies. And one might assume that an insurance contract on one of these slave trading ships in which a policyholder could claim an indemnity if a designated person or group of people died for a covered reason or were injured would obviously be categorized as a life insurance policy. And so it wouldn't be enforced by courts of law in jurisdictions where life insurance was illegal, like in France or in the Netherlands. But actually, these policies underwritten on human cargoes were upheld by the courts. And magistrates and jurists at the time noticed and commented on this apparent contradiction between what was an accepted practice and what was the letter of the law. During the 18th century, French jurists, I know the case of France the best, but French jurists offered two competing justifications for why insurance policies underwritten on the cargoes of slave trading vessels were not illegal life insurance policies. One justification was simply that they said African captives are commodities, and so they're insurable as such under the normal laws that govern maritime insurance. But there's actually another explanation that's given, for example, by a practicing lawyer in Marseille, Barthésat Marie Amerigon. He says that the object of these insurance policies on human cargoes actually wasn't the lives of the enslaved, but it was their liberty or the financial value that was spent to gain possession of these enslaved people. And so, and that's the value that would be lost if the captives couldn't be sold. So this is his justification for why these insurance policies on human cargoes were illicit. Slavery
Now,
had
can I just ask you quickly?
Yeah, sure.
Who would be the plaintiff in a lawsuit? So the insurer would then say, well, sorry, this was an illegal. There's a loss, the policyholder claims the loss, and the insurer says, no, sorry, that was illegal. Is that the way? Like, how does this lawsuit ever get brought in the first place?
I have never seen a lawsuit brought on this basis. I mean, in theory, yes, it would be. Oh my goodness. They really want to leave me in the dark.
Just don't leave us in the dark and we're fine.
Okay, I hope that won't happen again. I really have never seen an example of a lawsuit. In theory, it would be the insurers that wouldn't want to honor their duty to pay the indemnity. But I think it was more of an academic question that someone who was trying to write a commentary on an insurance law in France, for example, would treat, but wouldn't necessarily be an actual lawsuit in a court of law. Yeah. Okay, so this justification, based on insurance of the liberty of a person and not the life of a person. Where did this come from? Well, it comes from Mediterranean captive trade, which is something that's existed since the ancient world through the medieval period and continued in the 18th century in Marigon's day as Muslim corsairs took European sailors and fishermen captive and dragged them to cities like Algiers to await ransom. And it had long been customary in the Mediterranean to insure the ransom price that a relative or maybe a charitable organization might pay to liberate a Christian sailor in case that ransomed person might die on the return voyage or might be captured again before they could reach safe shores. And this was codified in France in this 1681 Ordonnance de la Marine, which permitted people to insure the ransom price of the persons that they will bring out of slavery. This is actually the only reference to slavery in the ordinance. this ordinance that was the main source of maritime law in France until after the Revolution. And so Amerigon and other jurists cited it sort of out of its original context to justify insuring cargoes in the Atlantic slave trade. I mean, if you look at this graph, this ordinance is passed in 1681. French participation in the slave trade is really just beginning, so the law was not written with this kind of slave trade in mind. This is just another example that I'm of this argument being employed that I think is really cool. This is a copy of the Ordonnance de Marine that was in the archives of the Admiralty Court in Nantes. Nantes being France's most important slave trading port. And it's interesting because an officer of the court has added a comment after this relevant Article 11, where he says, basically, we can also insure the blacks that we trade on the Guinea coast, but the case of a natural death is always accepted, as well as the captive that gives himself up out of despair. So this is a real example of an official in a court of law making this connection between this clause that has to do with Mediterranean captive trade and a justification for insuring the human cargoes of slave trading ships. And this comment sort of evokes a very key term in the history of the insurance of the slave trade, natural death. And here I'm going to start to leave this sort of discussion of legal doctrine and start transitioning to speaking about business practices. So, in this section of the talk, I guess my question is, what were the dangers of the slave trade from the perspective of insurance underwriters? And what types of risks would they typically agree to insure versus those potential perils that they would often seek to exclude from coverage? And how might this be different from jurisdiction to jurisdiction, from empire to empire? Merchant manuals and legal commentaries from the 18th century or from the early modern period say that deaths or injuries suffered by the enslaved during the infamous Middle Passage were covered under insurance policies if they could be attributed to the perils of the sea, or if they were inflicted by white crew members in suppressing revolts. And these commentaries say that indemnities could not be claimed for natural death, including for deaths resulting from sickness, malnutrition, inadequate hydration, suicide. Scholars who've then written about insurance in the transatlantic slave trade have basically taken what these commentators said, and sort of treated that as fact, as truth. But what I'm trying to do with my current, ongoing research project is to try to locate in the archives as many of these policies that were underwritten on slave ships as I can, and really just to study their terms and their language and try to sort of test what we find in these commentaries against real contracts. I think the idea is pretty simple, but it hasn't been done already just because these sources are very difficult to track down. In advance of the seminar, I asked Peter and Travis to circulate an article that I published this year in the International Journal of Maritime History. That article is based basically on the analysis of 13 French insurance policies on slave ships. And those, I had to go to 5 different cities to track those down. And now I'm trying to expand this corpus to include sources from other empires. So I've done some work in the US. I traveled to the UK in September and October to do some research in the National Archives and in a couple smaller record offices. And down the road, I'd like to find slave voyage policies that were underwritten in the Netherlands or in the Iberian empires. So I think that this is going to be sort of like an ongoing project for several years. And this is really challenging. I mean, the main challenge is that remarkably few insurance policies or copies of their complete terms, insurance policies on any line of trade survive from the 18th or the 19th century. So besides sort of printed sources like ordinances and commentaries on the law, The sources that tend to survive are account books that were used by underwriters or ship owners. But the problem with these is that the entries are usually really abbreviated. You really can glean from them an insurance premium, a very brief description of the voyage that might be attempted, the ship's name probably, maybe the value that the underwriter subscribed for. But these entries are really, they're produced in order to jog the memory of the record creator, the underwriter. And so they don't reproduce all of the details of the insurance contracts. So let me start with showing you one British example of what the kind of source that I'm trying to seek after. So this is a complete original copy of an insurance policy. This is a policy that was underwritten by the London Assurance Company for a ship that was called the Unity. So what can we notice about this source? First of all, the contract is written on the sort of standard form that the London Assurance Company used to underwrite voyages in any line of trade. The particulars of the contract, like the beneficiary, his name is John Smallwood, the name of the captain, these other kind of details of the voyage are written into this printed form by hand. And one detail here that's interesting is the flexibility in the definition of the route. So this vessel that's owned by Smallwood is insured at and from London to any places on the coast of Guinea, and during her stay at each place, from thence back to Barbados or London. It's very typical of marine insurance policies from this period, particularly on slave trading vessels, to give as open and inclusive a definition of the voyage as possible, because the ship owners didn't want their insurers sort of reneging if their vessel had to unexpectedly change its course and then experienced an accident. I gave this example in my article of a policy concluded in Bordeaux because, and you can see by the small handwriting in the first section of the policy, it has the most complex and nuanced description of a slave ship's planned course out of all of the contracts that I've found. So this policy is in effect, quote, from in front of this city of Bordeaux going to the Ile-de-France and the Ile-de-Bourbon, later to go from the same place of Ile-de-France to the coast of Mozambique, eastern coast of Africa, to Monfia, Quiloa, or Mozambique, putting in, if the situation demands it, at the Ile-de-Bourbon or Madagascar. In one or many ports, anchorage points, or places in the said eastern coast, whether in going up the coast, going down, or retracing, wherever it will seem good to the captain to trade blacks, gold dust, leather, elephant tusks, dye woods, or other effects or merchandise of whatever sort, whether they proceed from the slave trade or otherwise. Okay, and it goes on. Even though—
So can I just ask quickly about that? I mean,
yeah, sure.
That seems like it's very broad, as you said. Were there other places that they might have gone that are being ruled out by this? Like, oh, well, instead of going left, we went right and went to Brazil instead? Like, is that really, what are they ruling out when they specify that these are all the many, many things that you can do?
Well, I suppose they're ruling out that they're going to be trading on the western coast of Africa. I mean, maybe this route that's being described in the policy was a more unusual route. It was one that was only attempted later in the 18th century by French slave traders. So perhaps they're specifying this because it's material to the insurance premium. It indicates a more dangerous and less common voyage. I don't know. Does that answer your question in a satisfactory way? Okay.
One little side note, these sort of geographic limits are very common in marine insurance policies today because, of course, it does impact the risk.
Mm-hmm. Yeah. Okay. So, I mean, one thing I do want to say based on the historical research on the slave trade, is that investors in a slave trading voyage would target a specific section of the coast, and they would carefully select goods to ship there that would appeal to African merchants and rulers in that chosen market. But it was still strategic to keep the terms of the insurance policy as open-ended as the underwriters would allow. As this sort of French example here, I think especially clearly illustrates, in the age of sailing ships, vessels might have to unexpectedly interrupt a voyage to make repairs or to stop in ports that they hadn't planned to visit for commercial reasons. And if you look at slave ship captains' correspondence and sort of reports back home, there's many examples of them sort of changing their plan in response to information that they're only picking up on the ground in African slave trading ports. Okay, this is just one kind of interesting thing. So what's fascinating about this London Assurance Company policy is that it has sort of a flexibility about whether the ship is going to return to London or go on to Barbados. So a question that I had is why this flexibility? It wasn't that the shipmaster might plan to sell the human cargo in London. But in the same box as this insurance policy, I also found a letter that was written by the ship owner, Smallwood, 1 month before this insurance policy was signed. And the letter appears to contain instructions to the captain on how to manage the voyage. And so I copy out what Smallwood is writing there, even though it's pretty disturbing. He basically gives some instruction about what kind of slaves the captain should target, find young slaves, which you may sell to the Portuguese for gold at 5 to 6 ounces per head. Should it happen that you cannot dispose of your slaves to the Portuguese or others, you should be obliged to go to the West Indies. You are to be careful in purchasing your slaves that you buy 2/3 males. Let them be choice young Negroes, free from blemish, neither deaf, blind, dumb, or old, and that their provision be well boiled and in proper season, and that your seamen do not abuse or beat them. So clearly from this letter, Smallwood's preference was that the captain would sell his captives to the Portuguese if he could get sort of the appropriate price for them, and then he would return to London with a cargo of gold. And there's also a French policy from the period of the 7 Years' War that's similar. The policy is written to cover a voyage from the Guinea coast to the French Caribbean islands or to Nantes, to only one of these destinations. Okay, I didn't grab that one for you. So this might be sort of just an example of one possible approach to the Atlantic slave trade. You tried to sell captives en masse to another ship in Africa, avoiding the uncertainties of the Middle Passage. And that might be especially attractive to people in a time of war where a ship flying, say, British or French colors would be a target for privateers, whereas a ship, Portuguese ship of a neutral power wouldn't be harassed by privateers. So I guess, what's interesting about these insurance policies is that they can also be, I think, historical sources about the slave trade itself that I think are relatively untapped. So another thing, sort of the last thing to notice here that's interesting, I think, is that Smallwood's policy doesn't explicitly mention slave trading, and his policy doesn't mention things like mortality among the captives or natural death. But you can see from this letter that sort of accompanies this insurance policy in the archive that he was concerned about these risks of disease. He says boiling the rations are important. He is worried about violence inflicted by the crew insofar as these things could affect his profits. But these kind of concerns do make their way into insurance policies on slave ships in other cases. So this is a slide where I've just tried to sort of round up all of these policies on slave voyages that I've found so far and sort of compare their risk terms. So I've broken them up, with French policies on the top and sort of policies underwritten in British or former British American ports on the bottom. So obviously we have a problem with small sample sizes, so I'll have to continue to test whether these patterns are going to hold as I gather more materials. But so far what I'm seeing is that French insurers were willing to offer more comprehensive coverage to slave traders. In general, the deductibles are higher in British policies or on those signed in American cities like Newport or Salem. So often insurers were not bound to indemnify slave traders unless their losses exceeded 10% of the value of the ship or the cargo, whichever asset is being insured. Whereas in France, losses greater than 3 or 5% are often compensated. While some examples of insurance policies that I found in Bristol in Britain and in Rhode Island have a warranty saying that the coverage is valid only if the ship is copper sheathed and exclude insurrections on board the ship from insurance coverage, not only do many French policies include a clause that reinforces that the risk of revolt is covered, but some even go further. And there are examples of French policies in which the insurers agree to bear the risks of revolt on smaller craft that were used to transport captives from the interior to the coast of Africa by river, or to transport them sort of past the zone of breaking surf to a waiting deep water vessel. And a few of these French examples actually really stretch the definition of a marine insurance policy by placing responsibility for accidents that would clearly take place on dry land in Africa in the hands of the underwriters. So they include clauses mentioning pillaging or theft of goods left in the charge of African slave brokers, the cost of ransoming white slave traders out of captivity, loss of life and limb among the enslaved through insurrections that occur in forts, or otherwise while the captives are detained on the coast. I'm trying in this talk not to repeat a lot of examples from my article because it was pre-circulated, but I just want to here give one example to just sort of illustrate what I'm talking about. This is a policy from a ship called the Barbason, and it says we run the risks of fire, pillage, theft on land, detention, ransom, revolt of the blacks, both on board the ship and in the places where the captain will have placed them on land, or otherwise equally on the blacks that may fall into the sea or throw themselves into it, both from on board the ship and from pirogues, which are these little boats. And it says we will only be subject to thefts and pillaging that will be done by force majeure. What I find fascinating about these contracts is that they show concern for risks that are related to cross-cultural trade in Africa. So, for example, this term that extends insurance coverage to the potential cost of having to ransom members of the crew. This is very puzzling, but I actually found a lawsuit in the Bordeaux archives from 1789. It was sort of a botched hostage exchange that led to an insurance claim in Bordeaux involving the owners of these two different ships, the Darcy and this ship called the Blouin. And what happened in this case is that during trading near the mouth of the Gabon River in Africa, the captain of the Darcy forged a deal with local merchants in which he advanced them goods. They promised to return in a short while with captives. And then to prove their commitment, the African slave brokers gave the Darcy 9 hostages or pawns that were probably their family members or their kin. And in the end, the French captain got impatient and he didn't wait for the hostages' family to return, but he just departed the coast for America and probably enslaved and sold the hostages. So this violation of their agreement led to the arrest and detention of a second French captain who had the command of this other ship called the Blouin and 6 of his sailors. The local African ruler identified them as belonging to the same nation as the ship that had violated its agreement with local merchants. And so he made these men sort of take the place of the stolen hostages and assume responsibility for their countrymen's sort of dishonorable actions. And so back in France, the owners of the second ship sued the Darcy's owners, claiming that considerable sacrifices had been demanded to get the shipmaster freed and obtain his liberty. And so they sued an admiralty court for damages that amounted to the cost of ransoming the captain and paying wages and compensation to the sailors. I'm sensible to the fact that it's sort of, we shouldn't give a lot of space to a story about a few French white crew members being enslaved and losing their freedom for a limited amount of time, when there's millions of African men, women, and children being forced into a racialized form of slavery. But I think that what we can take from this lawsuit and from these French insurance policies that allude to the risk of trade goods being burned or stolen or caught up in conflict in Africa, these risks that sort of refer to situations where French slave traders end up on the wrong side of their African counterparts or African rulers, is that, what we can take from all of this is that Africa was not in the 18th century a space of European colonial power outside of small enclaves. So Europeans needed to show up with the kinds of textiles, the kinds of firearms, and other objects that consumers appreciated. And they also needed to play by local rules and make sure that the right people received gifts and due deference. This was part of the dynamic of the transatlantic slave trade that's sort of overshadowed, I think, by our later knowledge that in the late 19th century, Africa would become a colonial space. But this dynamic shows up in insurance contracts because it was something that people with a financial interest in this had to take into account. So the last thing that I wanted to show you is the premiums, the insurance premiums that I've found so far. And I hesitated to show this because I haven't made as much progress on entering data that I gathered in the UK last month as I had hoped. So I've been especially interested in gathering examples of the original insurance policies, but much more numerous are sort of these abbreviated insurance records that mention prices. And so that's why there's many more examples of insurance premiums than contracts that I have. So I just show you this graph to sort of give a sense of future possibilities. One thing that you note here is that insurance rates in the 18th century were very impacted by war. Periods of conflict are responsible for the highest prices that you see in that graph. So I'm hoping that as I continue my research, I'm going to be able to compare the costs of insuring slave trading vessels in different jurisdictions, in France, in Britain, perhaps in Spanish and Dutch ports. In the historical literature on reinsurance in general, it's common to find scholars making the claim that insurance rates are lower in London than in any other market in Europe in the 18th century. But thus far, there's not a lot of empirical evidence that's been presented to support that comparative argument, because there just isn't abundant and representative data about insurance rates in Britain. And there's lots of evidence in merchants' letters and accounts that they compared insurance premiums in various markets across Europe before deciding where to purchase insurance. So I return to the Smallwood example that I guess is the central example in this talk. Smallwood's letters from 1722 show that he was shopping around for to find the best insurance rate for his ship, the Unity. So he writes to an associate in Hamburg to sort of tell him what insurance rates are for a voyage like his in Hamburg at that time. He quotes the insurance rates that he's heard in his local London and sort of says, can you do any better? There's other examples of him shopping around. I'm running out of time, so I just breeze through this other example. This is from a slave trader in Nantes. This is an account book And it's a sheet out of that book where he is listing insurance coverage that he's purchased in London. So, we would think that if it was so easy to purchase insurance in a foreign port, that in the 18th century, this market would be pretty well integrated, and it just wouldn't be possible for one port to offer lower rates for a given type of voyage, because then the quantity of demand, the quantity demanded of insurance in that port would increase, and whatever price advantage would then sort of quickly disappear. But if there are differences in the terms of coverage that are offered in different ports, then that could lead to persistent differences in insurance rates. But differences in insurance rates that are not reflective of sort of the efficiency of the market institutions. So I think this is why it's important to sort of combine our more extensive information about insurance pricing in this period with a greater and more detailed knowledge of what were the terms of these contracts. As I collect data on the premiums that were paid on slave trading voyages, sort of the hypothesis that I'm hoping to test is whether policies that were underwritten in France on slave ships were comparatively more generous in their terms of coverage, and thus whether this might be paired with slightly higher average premiums in France compared to other countries. So a more generous coverage going along with merchants being willing to pay a little bit more for coverage underwritten in French ports. So I'll just end with showing these tables that I think are indicative of this. Of course, this hypothesis is going to require a lot more testing. And, I think a last observation that I'll make here on these tables is that, we also have to disaggregate these insurance prices for coverage on slave trading voyages by the number of legs in the voyage that were being covered, because there's a lot of different configurations of these policies. Some of them cover, just the leg of the voyage from a European port to an African, a section of the African coast. Some of them look a lot more like that traditional triangular trade that we sort of learn about in world history in high school. So they cover a voyage from a European port to an African market to an American market. And some of them really cover the entire circuit, including a return back to Europe. I think it's also a bit misleading to call these triangular voyages, because there's often an intermediate stop in a second European port that's mentioned in the contracts, or sort of a rest stop, if you will, in the Cape of Good Hope. So these are quite complex itineraries, and that's something that you also have to be nuanced in describing as you're talking about pricing on these voyages. So I will end there. I look forward to further questions, and I hope I haven't taken up too much time.
That was great. So the queue is open for questions. I'd like to invite, especially Michael Isley, if you want.
And Jeff Clark too.
And Jeffrey Clark, of course. But Peter's hand is up first, so.
No, I'm gonna pass. I'd really much more like to hear what these guys ask about.
Well, first of all, I find it kind of fascinating that a lot of the underwriting principles that people were talking about 250 years ago are precisely the underwriting principles that people are talking about today. I guess it's not surprising. But I have a question for you, a more basic question. What is the purpose of this research? I mean, what do you think you hope to prove or demonstrate?
Yeah, it's a good question. I mean, first of all, I'm interested in recovering the sources. I'm interested in creating a database. I've read, I think most of what's been published about how insurance intersected with the slave trade. And I've just been really frustrated by how little there is to know about what did these contracts look like? What were their terms? How did people wrestle? And how did they try to come up with solutions to this problem of treating human beings like objects? So I think my first contribution is just to try to create a bank of these historical sources. And then, yeah, I'm interested in making a comparison in practices across empire. I came to this from a dissertation that was about early insurance markets in France and happened upon some of these insurance policies underwritten on slave ships in France. And when I've presented this research in the past to audiences that are more familiar with the British context, the feedback that I often receive is, oh my gosh, is that the things that I observe in France would never have happened in London. Oh, I just have to move and it comes back on. Okay. And so I just really like to test that feedback that I've gotten from other scholars and see if that actually is true.
So sort of the intersection with modern insurance means this sort of trade probably would not have happened. That is, people would not have made this capital investment if there wasn't insurance available to them. So was there any consideration in the marketplace about the morality of the trade and whether or not insurers ought to engage in insuring these sort of voyages? Which I think could translate today because insurers insure, for example, the production of hydrocarbons today, and there are a lot of people think that the insurance industry should not be doing that. So there is some sort of a connection there. But did you find anything 250 years ago when people were thinking about the morality of the businesses they were insuring?
Yeah, that's such a key question. So, I think that most scholars would probably say, no, there in the 18th century, there isn't a lot of concern about the morality of this. I think that doesn't show up so often in a merchant's letters. But for example, the jurist from Marseille that I mentioned, Amerigon, he is concerned about the morality of this. He writes his treatise in 1783, so quite at the end of the period when there are some sort of friendly societies, abolition societies in France, especially in Paris. And he does say that there are aspects of this trade that are brutish and against sort of the natural rights of man. Another thing that I've also been interested in is there were, especially in these French ports that I worked in, Nantes and Bordeaux, there were a good number of people of color who lived in the port as free people who, maybe were in one case chef in a restaurant, domestic servants, also enslaved people who had affectionate relationships with white French subjects. And so it's kind of a thought experiment. I don't know if there's any, way of sort of proving what was going on in merchants' heads, but it wasn't that they only approached enslaved people as sort of numbers on a balance sheet. They also had sort of close relationships in terms of proximity, if not in terms of emotion, with people of color. So it's kind of hard for me to imagine that they didn't have any moral reservation about what they were engaging in. And I think also if you say that, well, this was just the 18th century, it was a different time, a different set of morals. I think you sort of also let them off the hook a little bit too much. That's sort of a way of not holding people to account. But it's an interesting question.
Great. So, Walter, and then again, Jeffrey, if you'd like to chime in at any point, we'd love to hear from you.
Mallory, this is Walter Welsh. I have just one, actually two questions. And first one I can start was with the Smallwood letter. I'm glad to pronounce the name of somebody that's not French because I would not do it well. So in the Smallwood letter, there's a reference to mortality of blacks and whites, so the difference. Do you know what, did you look at that at all? What were they after with that?
Yeah, I'm not sure if I remember what's going on in that letter, but I have not looked at that, but there is historical research in that compares the mortality among the enslaved during the Middle Passage and the mortality of the white crew members, and finds that the sailors actually experience higher rates of mortality. Um,
So let me ask you,
Yeah.
move from that question though. Does the insurance policy work like as life insurance would? So if some slaves died, there would be a payment under the policy, like individual by individual?
yes, yes, with some caveats. It depends on how the person died. If the person died of disease, if the person died of a number of things that are related to not being fed properly, one of these things that falls under the category of natural death, those deaths would not be compensated. There are also these sort of deductibles that are in the policies. So it changes from policy to policy, but usually the loss has to be greater than a certain percentage of the value of the assets that's being insured in order to be claimed. So if you had a really lucky slave trading voyage and only
I'm sorry, I didn't mean to interrupt you. So it's looking at it more like
Yeah.
property, the value of the assets. So that would be, is there a duty on the ship owner or shipper to use care with regard to the cargo, the slaves, the individuals?
Well, I mean, that's clearly communicated in instructions to the captain, such as the Smallwood letter that I showed.
Okay.
But that is not really a point of focus in the insurance contract itself.
All right, and then one other thing, my focus is mostly on U.S. life insurance, but there is a form of policy that was established for thoroughbred horses, which is really viewed as a form of life insurance. So it's based on the life of the horse. It's a strange form of insurance. That's just an aside. But thank you very much for your presentation. Gives us a lot to think about. Thank you.
Thank you for your questions and information about the thoroughbreds.
Jeffrey? You're muted, I think.
Can you hear me now?
Yeah, perfect.
Great. I enjoyed your presentation, Mallory. Just a couple of points of information, just based on the very recent information. I think just to flesh out what you were saying, Mallory, I think that the guy who worked out these mortality rates on the ship voyages wasn't it Philip Curtin? Am I remembering correctly?
Maybe I would have guessed David Richardson, but
Okay.
Not
Well,
sure.
anyway, wherever I'm remembering this, I think what was going on is that if you look at the relative mortality of crew to cargo in the early 18th century, the mortality rates are comparable.
Mhm.
By the end of the 18th century, I think they've actually brought the mortality of the slave cargoes down, but the European crew mortality kind of remains persistently high, which actually kind of makes sense given the fact the differential disease experience. But I think there may be Mallory on aren't there averaging clauses applied to the losses on slave cargoes? Am I remembering that incorrectly?
Yes, so that's what I was trying to get at with the deductibles in part, that the partial loss has to sort of supersede a floor before it can be claimed as an average. There also slave insurrections I found are considered general average, and so the owners of the cargo as well as the owners of the hull of the vessel also have to contribute.
Right. And now, at the risk of this starting to sound like an infomercial, just two things. This is an article of mine that I published so long ago, I don't really remember very much about it, but it's called Insurance as an Instrument of War in the 18th Century. And I don't know if you've ever come across it, but it might give you some ideas about the relative perceived relative advantages of the French versus the British insurance markets. And it had to do with this perverse situation that occurred during the War of the Austrian Succession, whereby, allegedly anyway, and raised a big pamphlet war, French merchants were insuring their cargoes on the London market because of the price advantages. And then the British Navy, of course, was going out and trying to sink the French vessels that were being insured by British insurers. So the British insurers were compensating the French for the wartime losses delivered by the Royal Navy. And then the question is, are we better off making the profit on the insurance business, or is this a crazy kind of interference with state policy? So, the Geneva Papers, 2004. And so there might be something in there that either confirms the misapprehension or that maybe explains their perception about it. And what was the other thing? I had one other thing to think about, but anyway, I can't remember. But anyway, I enjoyed it. I think this is a terrific topic.
So, Peter, you want to go next, because you have to go soon?
Yeah, I was going to ask a question that maybe you were going to ask. I think I'm channeling you. On page 21 to 22, you talk just very briefly about the concept of what's insurable and what isn't. And I'd like to hear more about that. In particular, I'm interested in whether they had anything that looked like a modern sense of moral hazard, and whether there was a sense that, oh, the reason why something isn't insurable is because that's a risk that you control, and when we insure it, when we transfer the risk, you increase the risk because now there's no reason to take precautions against that. Did you run across logic that looked like that anywhere, or when they were talking about, or maybe it's just you that was talking about insurable versus not insurable, what's that about in your sense? Like, why is there that distinction at all?
Yeah, I really like this question. Did they have some sort of concept of moral hazard? Of course, that phrase has not been coined. I don't think that they have as well theorized a concept like that. But I think that is part of what natural death is trying to get at as a concept. They don't really have a very clear definition of natural death either, because sometimes in the insurance policies, they sort of define what they mean by natural death. And when you compare these definitions, they are different. They have, at least in French law, something that they call la vis propre de la chose. So the things about the object insured that are sort of contained within it and probably will lead to its damage or destruction. So it comes from sort of like the insurance of goods that are subject to rot or to mildew or to being broken easily, like things that are transported in clay or glass vessels, and they don't insure those risks. And so they also extend this concept to enslaved people, saying that enslaved people are liable to fall into despair and to do things like commit suicide. And so that should be something that is, yes, a peril, but not an insurable risk. An interesting question is sort of, are they concerned about white crew members perhaps responding too harshly to insurrections, which is a very reasonable fear, I think, because if you think about a few white men on a ship full of dozens of people, you might think that they would overreact from the perspective of the underwriters. I haven't seen an actual case of insurers using that kind of argument to push back against an insurance claim. But you do have to wonder with these deductibles, for example, if this is sort of a moral hazard. Having a high deductible means that a ship captain, if something goes bad, he's going to respond with, destructive force, knowing that you want to have a loss above 10% if there's going to be sort of an insurrection on board, because that's when the insurance will kick in. Whether someone would have that kind of calculation. I mean, I do think that one thing that I think is fair to say is that ship captains were aware of the insurance status of their ship, because I've seen in letters things like an example that I thought about including in this talk, where a ship captain writes a report back to England saying that, hey, just so you know, a couple of slaves ran off today with our boat. And that's going to be something that the insurers are going to have to take care of. So I think the ship captains are pretty savvy, and they have a lot of business acumen, and they are aware of the insured status of the ship, and that could be something that impacts how they act.
It might be interesting if some claim history has survived as well. One of the ways that marine insurers deal with the moral hazard is a number of implied warranties, including an implied warranty of seaworthiness, which means there's a non-waivable duty by the ship owner to make sure that the vessel is seaworthy, appropriately equipped, and manned for the voyage.
Yeah.
So, okay, so then David, last question, and then we'll thank Mallory for coming. Unless you have to go, Mallory, we're at the top of the hour.
No, perfect.
Well, I'll make mine easy. It's a bit of a big picture question. So to what extent do you think the availability of insurance actually perpetuated the slave trade longer than perhaps it would have existed economically?
I don't know how to answer a question like that, because I feel that it's a bit of it's like a chicken and the egg problem, insurance is something that, I mean, it helps to financially organize the project of the slave trade. But on the other hand, the slave trade is an economic opportunity that people want to take advantage of. And so they adapt this existing technology in order to help them do that. So I think that these two things are mutually reinforcing. I don't know if I did not do this in my dissertation. I'm not sure that I can do this in this other project, make a causal argument about how insurance allows certain lines of trade to exist, or to exist in the volumes that they actually do. And, to sort of test the counterfactual of, if there had been no marine insurance, would we have colonization in the Caribbean, or would we have an Atlantic slave trade? I mean, I think that's a good thing to think about and sort of to test, because you want to make sure that you're ensuring, that you are working on something that is meaningful in sort of the history of capitalism. But I'm not really sure how to answer that question. Do you have any suggestions?
I don't, except for the second part of that question to me is, what current things are occurring that might be analogous to the slave trade that we are insuring now, that 40, 50 years from now we wish we hadn't? And and to some extent, does it supplement the economics so that it makes it profitable, or it makes it sustainable, when it wouldn't have been if it was just purely on the economy?
Yeah. Well, yeah, I mean, that's a great question. I mean, the one thing that I will say to that maybe speaks to it in some way, is that I have found in France some insurance policies on slave trading ships after the slave trade was illegal in French law. And those policies include a load of terms, about what is going to be the insurer's responsibility if the ship is captured or detained by state actors, including French state actors. And so, I think that's a pretty clear argument that at a period where slavery, the slave trade is becoming illegal in a lot of places and is fading out, insurance is contributing to sort of buttressing this in its last years. I found that pretty interesting, some of those 19th century insurance policies.
That was interesting. Thank you.
I'll use that as a plug for a conference that we're planning in the spring on the topic of ESG and insurance, which has a lot of sort of interesting analogs here, like climate change and whether there should be regulation of insurance companies to
Mm.
help stop climate change or affect social equity. So anyway, there will be some echoes of this in that, I suspect, and we'll be sending out invitations to that event soon, and I hope a lot of you can attend. But let's all thank Mallory for joining, and it was a brilliant talk, fascinating paper, and hope you all have a wonderful holiday season, and look forward to seeing you in the spring.
Thanks. Thank you, Mallory.
Thank
Very
you.
Thanks so much to the audience. Thanks for the great questions.
Thank you.